Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite strong structure level. This zone was acting in fact as previous resistance, preceding all these rejections to the downside. Then the market broke above the zone and all that previous resistance was turned support here. And at the moment the market is testing this previous monthly resistance turned support, and we could expect in fact a potential rejection to the upside away from this level. So the monthly time frame at the moment seems quite bullish. We can also notice that when you have a pattern, in this case a strong impulse followed by a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly with this previous resistance turn support, therefore creating a confluence of support in this area that we could in fact expect this market to potentially reject to the upside. So the monthly time frame does seem quite bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, the market still is in a quite ideal uptrend. The market is still creating higher highs and higher lows. From a weekly perspective, the last move was the creation of this higher low, higher than the previous one. So the next logical step would be the creation of a potential weekly new higher high. Because when you have the development of an uptrend, that is what you would expect, the creation of new higher highs and at the same time, the creation of new higher lows. So the weekly time frame seems quite bullish. We can also notice that from a structure perspective, the level that the market is currently testing and rejecting to the upside here is exactly the previous level of resistance from which all this move to the downside was created. Again, acting as resistance here, and now the market has broken above the zone. So this previous resistance is now turned support. The market is testing the level as support, and we could expect a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Well, from a daily perspective, at the moment we have a situation in which the market clearly has just broken above structure. This zone, in fact, was acting as previous daily resistance. Now the market has broken above the zone. So this previous resistance is now turned support at this area, because previous resistance in the market, once it is broken to the upside, becomes support. And I also spoke about USDJPY quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Then after this break higher above this structure, I explained all the reasons for which we could expect a retest and rejection to the upside, which again is exactly what the market did. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. But at the moment, what kind of structure we have? Well, as we were saying, we have previous resistance turn support here. So if the market will go and test this level, there is definitely the probability of seeing more institutional longing of USDJPY inside of this area. Now, why am I saying institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can see how with the last report, net positions have been decreased. We went from having minus 126.1k net positions all the way down to minus 144 0.3k net positions. So institutions have been moving to the bearish side for the JPY. And keep in mind that all currencies on the spot are traded against the USD. So if we're looking at the data for the JPY, we're actually already looking at JPY USD. So if institutions are shorting JPY USD, they are essentially longing USD JPY. So we can see in fact how 12,400 shorts got added on the JPY and 5.6k longs got closed, meaning that institutions have been shorting JPY and closing their longs, therefore opening longs on USDJPY and closing their shorts. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. So in a situation like this, if the market will go and retest this level, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area. This definitely would not surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.